All right, on to earnings, and Capital First posted a stellar set of numbers. Profits more than tripled to 28 crore rupees. Vaidyanathan, Chairman and Managing Director at Capital First, is joining us on the phone line. So thanks so much for taking the time out to talk to us, and it's been another fabulous quarter. Stock's been holding on as well, but just in terms of the way some of the highlights really played out for the quarter, can you run us through that?
Yes, we've had a good 3 months and a good 9 months ending December 31. Our assets under management, or the loan book, actually grew from 9,070 crores to 11,700 crores, which is a growth of 29%. And the key part of our performance over the last few quarters has been the consistent increase in NII and the fee income. For example, for the last quarter, the NII plus fee was 175 crores as compared to 110 crores for the same corresponding period last year. So this increase of 65 crores, net of expenses and net of provisions, is straight away translating to the bottom line, which is increased from 10 crores to 30 crores. So basically, nothing really out of this income is anything that is a sort of one time. They're all operating income, and investors can and shareholders can fairly believe that this is a sustainable performance for us.
Sure. So take us to the margins as well, as to, because I believe they've also improved this quarter, and how do you see them going forward?
The margins have seen a slight uptake of about 10 to 15 basis points over the last 2 quarters. It's now gone up to 6%. The nature of business for us is largely the small and medium enterprises and people who avail of loans for business expansion, or even for smaller loans like buying a two-wheeler and so on. These are not very sensitive to interest rates. So we feel for us to sustain the interest rate of about, in NIM of about 6% is very much on the cards.
Okay, fair. But do you expect these levels to sustain going forward as well?
Yes, the growth trajectory can certainly be sustained. I've always been giving guidance of about 25% or little north of 25% for the last few years. And I think for us to grow at 25% should really not be an issue because the market's very large. If you step out and see the number of shopkeepers who want money, the number of SMEs who want money to grow his business, and particularly now with the Indian economy beginning to grow again, I think there will be a genuine and big demand for funds. So this is, for us to grow at 25% year on year for the next few years, to me doesn't seem an issue at all.
Let's elaborate a little bit on that. If you're talking of north of 25%, where do you see that coming from? You were mentioning about the way the SME and the MSME sector is panning out. What's the on-ground demand looking like? Can you run us through a little bit on that?
If you see the PMI numbers over the last few months, the numbers have, in India itself, I think there is a general uptick. Let me say, call it a slight uptick in terms of growth. For example, if you see the consumer durable sales numbers, they're up 13% in the 9 months. I saw that the car sales numbers are up 9%, 3 months in a row until January. Two-wheeler sales were up 6 to 7% over the last few months, over the last few quarters. So we are beginning to see from a period of 3 years where things were actually slowing down substantially. Rather as a relief, I must say that we are seeing an uptick on all the input variables that are going into building our business. So therefore, seeing by these indicators, if growth comes back and they stay in the sort of zone of 6% that we're talking about at GDP level, and these consumer products start growing at about 10-12%, for us coming from a small base should not be growth. Frankly, growth is the last issue that bothers me right now.
All right, Mr. Vaidyanathan, we'll leave it there. Thanks so much for getting us that perspective as far as the numbers have played out and what the outlook looks like. That's one of the top performers today. There you go, 6% higher. In fact, as we speak, stocks is seeing a little bit of a bump up. Is what we're seeing as far as the counter is concerned. It's had a good performance as well in the last few months. So just pull up the 3-month chart for you as far as Capital First is concerned. There you go, 30% higher. And today, on the back of the earnings impact and the kind of commentary that we were just sharing with the management, stocks again seeing a little bit of a move higher of nearly 6% is what we're tracking. All right, we'll take a quick break. Up next, we keep the focus with earnings itself, get another management going. Rajesh Mota, CFO for Specialty Restaurants, will be joining us to talk about the company's third quarter earnings.